All right, everybody, here we are again together at last for just more loveliness. Remember, you and I are surrounded with little puffs of loveliness. That is the truth. And I want to put a few perspectives on a bunch of things with this lovely post-market wrap-up on this Tuesday, January 8th, 2019. Awesome. So, let's talk about the markets today, and then I'm going to go on about a few things here. So guess what? Stocks finished higher today after being all over the place, and I mean all over the place. Stocks gapped up, meaning they opened higher. The Dow Jones Industrial Average was high as like 335 points to the good. Then all of a sudden, both the S&P and the NASDAQ went negative, pulling the Dow Jones Industrial Average almost negative. Then we kind of went back up about 100 points, 200 all day long. And yeah, we finished to the good, off the highs as well. But again, what does this really mean in the bigger picture? Let's talk about that real quick. We now have in place, and anyone who doesn't see this is in denial, big time. We have a Fed put under the market. We have a presidential buy, and we got more and more fake China news stories being floated out there with regard to trade to attempt to prop up the market. Meanwhile, we are still over 3,000 points off the high. Let's put another perspective on that for you. This market topped out in October. Since that time, this stock market has been in a steady decline. The presidential buy recommendation came 5,000 points off the high. We had already entered a bear market. Okay, great. So, a lot of things got set up at that point to try to prop up this market. And with the Fed playing ball now, and I mean the Fed and the president their foreheads are touching right now. They are right together, linked at the forehead. They're definitely making sure the easy money pours into this market, rates stay suppressed. Are we going to get a hike next year? Maybe two. Well, guess what? I don't know how many of you caught this on CNBC today. Now there's all this speculation about a rate cut. Well, wait a minute. What about the strong economy we have? How about this? For weeks upon weeks, we are getting, again, and I talked about this earlier, I think. See, my brain's going a little soft here. But profit warnings from company after company after company. Apple, bad forward guidance. But we're supposed to ignore all that right now. Earnings season is coming up pretty soon. What's going to happen to this market when we start getting, this market starts to get real? These companies aren't doing as well as we've been told. Our economy is so strong, and all they're doing is buying back shares of their own stock. Does this sound like anything good to you? It's pretty crazy if you ask me, honestly. Oh yeah, we also found out that today, again, U.S. consumers, they're burying themselves even worse in debt. But the consumer's really strong. This is how they gauge it. When consumers keep borrowing and borrowing and borrowing, they, the ones that try to fist feed us news, want us to believe that it's a good thing. So it's a good thing for people to be in debt beyond their eyeballs. You can't make this stuff up if you tried. It's unbelievable. So here's the story. The stock market is absolutely detached from reality. It looks to me like every effort imaginable and things we probably can't even dream about. You and I, have anybody here, how about just everyone looking, would you ever have imagined that this would happen under this president? Because I would not have. He sent out his Treasury Secretary to meet with 6 of the biggest banks on Wall Street, that little meeting that they had. Then he issues his buy recommendations when we already enter a bear market, 5,000 points off the high, for which we are still over 3,000 points off the high. A Federal Reserve who has promised us maybe even more quantitative easing, because Powell did say that the unwinding of the balance sheet is now flexible. You got the C.O.D, the Supreme C.O.D, speculating on whether or not we're going to get a rate cut. So you can see this is probably more can kicking down the road here. No one wants this coming down on their watch, and I don't blame the president for what he's doing. I really don't. But I personally hoped that under this guy, I hope candidate Trump would have been the guy who won the election, not the guy who's there now. The guy who's there now, completely different perspective on the markets, completely, you remember big fat ugly bubble? Stocks are no longer in a bubble. And you remember his perspective on the Fed, how they were way behind the curve. They were just suppressing rates to prop it all up. Interesting. How did that all change? And again, let's think about this. A Fed put, a presidential buy, and fake news about trade, and the stock market is still in fact, thousands of points off of the high. Now, I want you to do yourself and me a favor. In the description of this video is a link to a 3-month chart of the stock market. Why a 3-month chart? Very simple. Again, stocks topped out in October. Look at what the stock market actually looks like. You do not have to be a chartist to see what I'm trying to show you here. The trend remains lower. Now, for those of you that remain skeptical and you think the trend is higher now because of the Fed put, because of the presidential buy, and every other thing they're going to do to prop up this market, I want you to ponder the profit warnings, forward guidance warnings from all these companies. And again, we're going to be in earnings season soon. A lot of reports are going to start coming out. Go look at that chart. Again, link in the description of this video. I want to hear your take on it. Even if you've never looked at a chart in your life, look at this one. I guarantee you're going to go, oh, why aren't we seeing this on CNBC or any of the lovely C.O.D shows? Anyway, that's it, people. We will reconvene tomorrow in the morning, and we will still have little puffs of loveliness around us. They're everywhere. They are everywhere, and we can't escape them. See you in the morning.